Okay, so I'm going to teach you about price action, and there's really only three things that you need to know. The first one here is an order block or a demand zone or supply zone, whatever you want to call it. I just call it an order block because it's simple. Now, an order block is essentially the last, when we're bullish, it's the last down close candle here before a big bullish move. That makes it an order block. And when we retrace to this order block, it's likely that we'll go up again, right? That's how order blocks are used. And the reason is it's seen as like a good place to buy for smart money. Smart money is just like large institutions and stuff. Don't read too much into it, but yeah, what you want to know is like, let's say you're bullish and you've had a big move that you've had here. This order block is where you want to enter. So I'll just get the measuring tool out. And then you usually want to target highs and lows, which we'll get onto later. See that? That's a free risk to reward ratio. So that could be like your whole entry pattern. But the order block's just a reliable entry pattern. But the key thing is bias, which we'll get onto. And then the second thing in price action you need to know is a fair value gap. See this thing here? This fair value gap. Essentially, a fair value gap is because we've displaced higher, there's not really been a good opportunity for people to like essentially buy and sell at this price, right? Because we're trading pound dollar here, and we're all traders, but like, people actually need to buy like the pound and dollar, and they need to buy it at like a decent price. So that's why price will often come into these fair value gaps, if that makes sense. So a fair value gap, what you'll find, right, is most times it goes into a fair value gap. It will often go into the order block here, right? But the good thing about fair value gaps is that you can often just, let's say if it doesn't go into the order block, you're likely to get your entry. So they're a bit more reliable, but you're going to need wider stops, if that makes sense. With order blocks, you might miss your entry, but if you do get it, you can get like a higher risk to reward. But yeah, I tend to prefer order blocks. And then the last thing you need to know about price action is just, let me get rid of this, is literally highs and lows. This is called liquidity, right? The reason why there's liquidity there is because you see how we've had this large move to the downside. A lot of people have been shorting here and here. You could also have liquidity here, but the key liquidity pool is this bit at the top, right? See how it's right at the top? Loads of people have been shorting here. So smart money we talked about earlier, they're going to want to sell to that, right? Because they're forced to buy at a high price because that's what their stop loss does. So you want to target key highs and lows, right? You don't want to target this one. You want to target the key ones in the range, the highs and lows, because that's where the most liquidity is. And look, you can see price goes straight to these highs and lows. And yeah, that's essentially how you determine bias, right? So let me just show you here. You see how we've been coming in a large downtrend, right? We have this large bullish move up. People here have put their stops, right, because they've longed. And then smart money has shorted. You see this fair value gap here? And this order block, they're shorting there, targeting these lows just for liquidity. And you see how we take these lows out and then we start to do the same thing again and then go down. It's just what price does. So that's all you need, right? You just need order blocks as a simple entry pattern, fair value gaps if you like them, and the key thing, this is the key that no one tells you, is all you've got to do is target highs and lows. Right? The entry pattern is the least important thing. If you just target highs and lows, like you'll be profitable, assuming that you can like manage your risk and like manage your mind and all that. But yeah, that's all you've got to do is target highs and lows. And the last thing I'll say, right, is the higher the time frame, the more important the highs and lows are, the more significant the liquidity is. So let's just get onto the 4-hour chart, which I like. Uh, so the key liquidity pools here would be this low here, and this high here. But because we're in a bearish trend, it's likely that we're going to take this low. So price will gravitate towards this. So let's go back to the 15-minute. See that the key liquidity pool is here. There's a lot of sell orders here because the large banks, they don't trade on the 15-minute, they trade on the 4-hour, at least the 4-hour. So yeah, if you target liquidity pools on the higher time frames, like you'll be profitable because all I use is the 4-hour chart. Like I'll just show you now. Like I just trade off the 4-hour chart. So for me, I would be entering probably on this order block here. Let me just show you. And another thing about order blocks is the bodies tend to be the best entry points. You can use the wicks. I'll just aim for a 2-to-1. But the thing is with order blocks, right? You can use the wicks as your entry, but the body's the most important part. That's where you really want to enter. But what I would say, let's say you entered at the body here, you have to put your stop at the wick because you often will maybe touch that wick. It's very aggressive if you do that, so I would do that. But yeah, that's all you need to know. Order blocks, fair value gaps, and target highs and lows.